All right. Hello, everybody. Welcome to another Learn It Live webinar. Tonight is Price Action Masterclass. So something we love, we hold near and true to our hearts is price action. So we're going to enjoy it a lot. My name's Thomas Atkinson. As always, I'm joined with Tyrone Abella.
Hi everyone, I'd like to think everybody loves price action because it is the key to success in trading. So we look forward to tonight and seeing how we can apply it in the live markets.
Absolutely. So just to get started, just go through the risk warning as usual. The information provided in these videos has been produced by third parties and does not reflect the opinion of Pepperstone. The information has been provided without any alteration or verification. So today we're going to be covering a few different aspects of price action. So one of them a lot of people are going to be familiar with, but we'll give you a couple of tips and tricks to it, which is how support and resistance zones can work together. The next one is we're going to be taking a look at how to identify and trade role reversal zones. And we're also going to be having a look at identifying channel patterns and also some other patterns within trends. And that's going to be one that a lot of people don't think about, and very, very powerful stuff. And then of course, Q&A sessions. So if you have questions, please ask them in the chat room and we'll get to as many as we can. We usually try to save around 15 minutes at the end to answer questions, because at the end of the day, you learn from asking questions and other people learn from you guys out there asking questions that are relevant for everybody else. So one thing we talk about a little bit is the step of the top-down approach. And that's probably step one of really being successful in price action trading. So we always want to start with something like the highest time frame, and then we want to work down from there. And a lot of people overlook this. They don't look at monthly weeklies because they're trading 1 hour, even 15-minute charts, but it still does play a large point into whether you're going to be successful or not in the market. We'll talk about why that is. We also want to recognize whether the market's trending or range bound, of course, and we want to use line, bar, and candle charts as much as we can. And of course, sticking to things like the top end currencies like Australia US dollar, Euro US dollar is always helpful as well when we get started. So before we go into some of the theory, let's actually take a look at the market because that's what we've been looking at recently, and discuss a couple of things that have happened that I think probably a lot of people are talking about. And one of those has been the emerging subject of cryptocurrencies again over the last couple of weeks, hasn't it, Ty?
It has. It's getting a lot of attention and traction for all the wrong reasons again. Yeah, this time on the big break, we've seen a really big fall in it now. Like we can see that descending triangle that we've been talking about for a little while now. But when that broke, boy oh boy, did it break properly. And yeah, we've seen lows that we haven't seen since nearly what we can call it August of 17. So this is a pretty serious drop now. And it also highlights the importance. We did mention this the other day, but we'll just do it again for the people who weren't here. That trying to catch a falling knife, if you like, is picking a bottom on something that hasn't really got a lot of history in front of it. Like we've talked about Bitcoin, not really being around for a very long time with any substantial technical analysis. And what we can see here is just a very sharp and hard fall without any real basis to stop. Now, a lot of people, we've heard some pretty ordinary stories of people trying to catch this bottom and really, take a big hit because they thought that it was probably going to bounce back. It's a very important lesson not to actually trade unless there is something to trade. So, don't try and pick what the market's going to do, because, especially in a instrument like the Bitcoins or any of the coins for that matter that haven't got a lot of trading technical history, it's going to be very difficult to pinpoint support. I mean, we can call the support line that it broke at the bottom of that descending channel a new support line, and if it goes up there again, we can certainly call that a role reversal area, no question. But we've got a sustained level there of basically not being able to break that around 6,000 sort of mark. So that's given us a little bit of history, but previous to that, it's given us nothing. So just don't be caught in the trap of trying to pick a bottom on it.
Yeah, so picking bottom is definitely not something you want to be doing in price action trading. One thing about Bitcoin was 6,000, massive psychological level. And price action is at its essence psychology. What we're looking for is we're looking for things that have been happening time and time again, And then when those positions or those sections break, like we see here with this big sell-off that broke past the 6,000, that's telling us that the psychology of the market's changed, and therefore the pressure is now to the sell side. So if you see something like this happen, and you've seen so many times this support has been found, what you're going to be looking for is really, you should only be looking for shorts at this period of time. And then you jump into the smaller time frames, you can get involved in the 4 hour, 1 hour, 15 minute if you want to. But you shouldn't be taking longs at this point, because obviously what's the market told us? It's told us that it's time for it to go to the next level. We don't know where that's going to be just yet in Bitcoin because of the history, but what we do know is the psychology has changed. So let's just quickly jump straight back into the charts. And for anyone new out there that isn't familiar with support, let's just go over some of the basics of support. So how does support get formed, and what are we looking for? So support basically is a psychological point in the market where the market's come down to a level, and then every time it's come down to this level, the buyers have gained control. So the sellers were in control, and the buyers have bought it at this point time and time again. So how we like to analyze support is after the second touch, we like to say that that is strong support, and therefore we're looking at potentially purchasing this particular pair or currency or whatever we're trading at the third and fourth touch. And this can go on indefinitely, and we've seen that many times before, Tyrone and I, throughout trading, where sometimes this will happen 10, 20, 30 times, depending on the time frame. But
well,
we want to be buying
a really good example. Yeah, we can see that in Bitcoin how many times. It's a really good example. Yeah, exactly.
Yeah. It's we kept buying 6,000, we'd be right a few times, wouldn't we? Until we weren't right. But then that's when we can reverse our trades. So we buy this zone and we buy the bounce, and that's the concept of support. So here's just quickly support in the real market. We can see here the double touch. So the first touch here, the second touch here, we'd be looking for buying identifiers at the third and the fourth touch. And that's what we want to be doing when we're looking for price action trades. So what about resistance? Well, essentially it's the exact opposite of support. It's when price is reaching a level and the buyers are losing control and the sellers are gaining control. So the sellers are pushing it back down. Same rule, second touch. On the third and the fourth and the fifth, we're looking at now potentially placing sell orders at this point. And this is that psychology where once somebody's seen it, other people see it, they jump in. Big fund managers see it, they jump in, and that's actually what you want. Contrary to a lot of people's belief, you should be trading with the bigger traders. You don't want to be fighting the bigger traders, you want to be going with them. So when you see reoccurring events like this, that is in essence telling you, pay attention to these levels. Ty, you want to go over this one? I think this is something that's very, very important.
It definitely. So we've just talked about the support and resistance in isolation, but of course, when the two are combined, especially in an isolated area that we can see here, it basically forms what we call a horizontal channel. Now, yeah, it's horizontal because these lines are static. So this is static support when it's a resistance and a support line. If this was an ascending channel or a descending channel, the resistance and support would be dynamic support because they would be formed by trend lines rather than actually support and resistance lines. So what makes these static is the fact that they are horizontal, and once they're etched in time, they are no longer moving. So the price that you see on the horizontal support and resistance will be there for the foreseeable future, which is great because what that gives us the opportunity to do is if we are selling at a point of resistance that we can see, we had, well, especially at that last touch there, on the at the end of this channel, we had a big candle try to break through and come back all the way down and close below the resistance. That was a big telltale sign that this price action was going to reverse. So and when we are talking about price action, that we are predominantly referring to what the candlesticks are actually telling us. So if we have a look at this now, again, it doesn't matter whether this is a daily chart, a weekly chart, or a 15-minute chart. What we know for certain is that red wick on the very last break of this resistance line, the buyers have tried to break this resistance. They've had a pretty serious crack, no matter what the time frame is, whether it's an hour, 4 hours, or even a week. The bigger the time frame, the more significant the crack, of course. And the sellers have overwhelmed the buyers by the close of this candle or bar and actually closed it below the resistance. So what that tells us that is the sellers are absolutely well in control. The buyers have had a serious go, And the price action of that most recent candle was almost inevitable that the next candle was going to play out the way it did, and consequently the fall. Now, the great thing about these channels is that when they have formed and we've got the isolation lines drawn in support and resistance, we've got very, very clear targets to aim for. And selling at the top there, we've got a very, very clear target at the support line, which has been established for a little while now. And we, as you know, like to take 80% of that expected move. So if that was going to be 150 pips, we'd be taking somewhere around the 130.
Yeah, so combinations, or otherwise known as channels, are one of the best trading patterns that we can place. Sorry about that. Just got knocked off. Okay, so points-based trading systems with price action. So we have a points-based trading system in our course, and it's called Presic. But with support and resistance, what we want to be doing is we also want to be following trends as much as possible. So sometimes those channels are going to appear within trends, and they're going to be like the lull where the market's having a rest and then it's going to go on with the trend. And sometimes it's going to be the end of the trend and the start of a new trend. But of course, as many people have heard, trend is your friend, and that's something that we want to be looking for. So let's jump straight into the market, because we can only learn when we're looking at real examples generally. And let's take a look at US dollar yen, because that's one, and US dollar CAD, which are very interesting at the moment in terms of their pricing. So where we like to start with when we're talking about looking at the charts is we actually want to jump into the charts, and we want to put a line chart on our screen. We actually want to start with the monthly. And what we can do is we can break down the monthly, where we're finding the most key levels of support resistance. So just the key levels throughout time. And this may sound stupid, but actually what we're doing is we're figuring out points in history where the market has found heavy support and heavy resistance. And what you'll notice when you do this is that over here, even though this was in 2000 and 2004, there was key support through this area. And that key support, funnily enough, is around the 100 or around parity. So what do we think about that? That's going to be such a psychological point. Parity means when that currency is equal to another currency. So they're both one. It's one, literally. That's going to be a massive thing for a lot of humans. You're going to see newspapers writing articles about it. You're going to see people talking about it and being excited about it, because we love those round numbers. So parity on the US dollar yen has always been a key support resistance level. And that's why we saw when it reached around this parity point, only in 2016, it acted as a key level of support. So once we've gone from monthly, we jump into the weekly, and then we can just reassess our lines. So do these lines make sense? Well, I think this resistance up here absolutely makes sense to the market right now. I think many people would agree. We can see here that the support was a little bit lower recently, and we can also see that we had some support over here as well. And then when we do that, we jump into the daily, and this is where we start to move across to our candles and our bars. And the reason we do that is because now we want to see, well, has there been any outlier points? Has the market broken higher? Yes, it has. So we again adjust our support resistance levels, and hopefully a lot of you out there can see we're starting to paint a picture of finding the most key levels in the market. So now we know that, guess what? If we're buying this US dollar yen, where should we be taking profit? Probably being us, around 80%. We'd be taking off here, but this should be the zone that it most likely gets to, up here in this 114.30, 114.40 area. But what happens if it breaks that zone? Well, it's either going to go to the 118.20 area, because that's the next point, or it'll go all the way up. So this is a very clear zone for us, isn't it, Ty?
It is, and I'm hoping everybody can see this. I know we've mentioned the USDN several times, but it just becomes clearer every time we look at it that, once this key level of the 114 and a little bit is broken and broken properly, there is just not a lot in front of it all the way to the 118. But in essence, what we do want to see is that price action kicking in the smaller time frame. So we're looking at a daily chart at the moment, but what we want to see is a series of higher highs and higher lows on a smaller time frame, which actually justifies the break. So it's not going to be enough just to break above this 114.40 area, if you like, where that line is. What we want to see after the break is potentially a retest from above down to this level again, and then we want to see a series of higher highs and higher lows. Now, we're going to draw it up for you now to give you a clearer picture of what we're talking about. But this is what price action tells us when we start to go down the smaller time frames. Say for instance, on a daily, we can see that obviously the patterns are very clear. What we'd love to see on a 4-hour chart is that once this does break, we have a series of higher highs and higher lows, similar to what we're drawing on the chart now. And that's confirming to us that that trend, not only has it broken that resistance line, but it's more than likely going to continue. Like a 4-hour change of trend, which is what we've just drawn up now, is a very serious change of trend. Like, it's not going to move only 15 or 20 pips. Yeah, that's going to probably move the couple of hundred that we want to really establish this move to try and get it to the 118. That's exactly what we're looking for. Now, if the USD yen did this exact pattern that we're looking for, which amazingly it does a lot, and it's not just the yen, every pair does it, because when there is a change of trend, this is the pattern that you're going to see. These are just dynamite for trading. You can almost bet your bottom dollar that every time that trough is reached on that higher high and higher low, the 20 is probably going to be there to support it. So when that moving average is actually catching up with it, you'll probably find that it'll be sitting on the 20 every time it actually comes back to the trough. And it just gives great reload zones if you're already in the trade to actually add more to it. Or if you have missed the initial break and you're waiting for that confirmation, it gives you plenty of really good entry points to actually join the existing trend, knowing that there's not a lot of traffic in front of us for about 400 pips.
Yeah, and by doing that top-down approach, we can start to paint this picture and start to get into those smaller time frames. So what if we do that quickly with the pound? And the reason I want to do this is because we're at a pretty key level right now. So again, we're just drawing it up. Ideally, we use the line chart. That just smooths it. What the line chart's telling us is telling us the close prices. So it's smoothing it out, and you can instantly see how much easier it is to draw these lines. So we've got the monthly to start with. Then we can see here that we've had some support here, and we've had some support here, right around this 127 zone. And then we jump into the daily, and we move over to the candles. And what are we seeing right now? And I think this is really interesting about the pound, is we are about to hit a very key level of support. This 127 is super key. And if we see this break and it breaks below, we should be looking only for short positions. Because if we go out to our weekly, what are we seeing, Ty? Every time 127, when this breaks, where's it most likely going to be going to? To the 120 kind of 124 area, and then down to the 122 area. That's what the price action's telling us. And it may sound crazy, but that is actually what it's telling us. When it goes and breaks past one level, it generally gravitates to the next price action support level. And when we have this bias, we can jump into the smaller time frames, the 4-hour, the 1 hour, and start looking for the patterns and the price action in that direction. And that still excites me to this day, because when I started thinking about the market that way, we started getting a lot more trades and becoming a lot more profitable.
And you've also got to remember that even if you look at some of the indicators that are actually supporting what we are seeing and supporting the break, the 20 and the 50 moving averages that we can see on this chart, you can see that the last time that they actually crossed to the downside was at around the 161 level, and they never actually crossed back until 131. Now, we can see that they crossed just most recently, they crossed it around the 134-ish level. That's the most recent cross. There's no reason to think that if this level does break, that this is not going to go on to the 121s. As unfeasible as that may seem to people thinking, how's it going to go 600 pips in a hurry? The pound can move in a very, very big hurry, and with all of the turmoil, surrounding the Brexit decision at the moment as well, no one really knows what's going on there. In particular, the people that are running it, anything could happen, and generally does. So we've got some very, very key signals here that if this does break, like we mentioned earlier, it's similar to the USD yen. There's not a hell of a lot of traffic in between this break here and the 121.
And we're seeing this in so many pairs at the moment. Say this pound, what we're going to be wanting to look for from a price action standpoint is we're going to want to see a candle, at least on the daily, close below this zone. Ideally, we'd like to see a week close below. And we can see the reason that is the market's told us the weekly's where it's at. And how we know that? These wicks. So see how all the closed bodies were around this point. Again, the closed body was around this point. there hasn't been a closed body underneath this point in a while. And that's very important as price action traders. We want to see the candle close underneath. When it closes underneath, then we can start to look for trades. And let's say that did happen. It came down here. As Tyron said, and we're going to talk about role reversal a little bit later, but what we'd then be looking for is pullbacks into the role reversal zone. So if that happened on the 4 hour, then we start to see potential trade opportunities that we can be looking for. So all of these things come together, and that's why price action is quite fun to learn, and it's also very profitable to learn.
Yeah. And with like we said, like when we're talking about the weekly, like Thomas said, if we have the break on the weekly, we're getting basically 3 or 4 of the biggest world markets all having their opinion for that week. And the general consensus for 5 days is that it is short and it is going to close below that level. That is a very, very significant break. It's no point looking at a 15-minute chart and seeing a 15-minute candle break under a weekly support line because, yeah, quite frankly, you know, that could change in the space of 15 minutes because we've only got one world market looking at it at one time, and it really is insignificant. But a weekly candle close below that line is a very, very significant close below it, and that's what we're looking at trading. That's when we go to the smaller time frames to look for that change of trend.
Same thing applies for the US dollar CAD at the moment, and you'll hear us talk about a lot of US dollars, and the reason why is that all of them are showing these break zones. So the CAD has been pretty weak actually across the board, so I encourage people to start looking at some CAD pairs because there's some interesting stuff there. But if we have a look at this, here is a massive trend line that's gone through for quite a while here, and we talked about this in one of our webinars a few weeks ago, and we were talking about this trend line just being basically a go signal. I was continuously giving it some go signal. It is
literally a go signal. It's just, it's poetry. It's actually trading poetry. And not only is it giving you the signal, it's giving you the exit. I mean, and that's the beautiful thing about channels. Although this is an ascending channel, like we mentioned earlier, we haven't even talked about that bit yet, but this is an ascending channel. But at the end of the day, you know, it's basically hit the target almost every single time. And if you follow our 80% rule, you've taken profit basically on every single one of those touches all the way up since October, effectively.
That's a pretty good price action trade. So it's something that's happened reoccurring. I like lots of things about this. A pattern we're going to talk about in a minute, even that happens. It pulls back, it double bottoms, breaks the double bottom, finds that congestion, and then it's going towards the top. And that's the kind of thing you want to start looking for. So, of course, we're going a little bit quick. It's because it's more of a masterclass tonight. We do assume some basics, but these are the types of things that you see, and then you follow them for months and you trade in between them. So once you even have figured this out on a 4 hour or daily or whatever time frame, you can start trading the smaller time frames along this bias. I think that probably makes sense to a lot of you out there. So pretty cool stuff. So just a couple of quick, I guess, tips with our price action trading. We want to be trading 1 hour, 4 hour daily predominantly. The reason we want to stick to these time frames is they are more seen by a lot of people. A lot of people do see this. It also helps a lot of traders out there because we all know you guys have busy day jobs, or you've got, maybe this is a side hustle, or maybe this is full time, but still not being a slave to the charts is really important. You want to be spending maybe a couple hours a day. We like to spend half an hour a day. That's where we're down to, but you don't want to be a slave to the charts. We've done that, haven't we, Ty? You don't want to.
We have. A lot of people actually don't believe us when we say, you know, I actually cannot remember the last time I spent an hour in front of the charts analyzing it. In fact, when we run these webinars on Wednesday and Thursday nights, they're the days we actually spend more time in front of the charts because we're actually presenting the webinar. Because believe it or not, we don't spend more than an hour analyzing those charts. But when you know what you're looking for and you've got your alerts set up, you'd be amazed at how many, you know, different currency pairs and different trading instruments you can analyze in a very, very short space of time. Because at the end of the day, you know, trading is a patience game. You don't want to be trading for the hell of it. And it's not a case of, you know, if you spend a certain amount of time in front of the charts, that doesn't actually equal an amount of trades that you have to place. There are times, many times, where we could spend an hour analyzing the charts and there's just nothing to do except go and get a coffee from down the road. And if that's the case, you know, that's a trading strategy in itself, because trading for the hell of it is a very, very common mistake, especially amongst people who are just starting out feeling that they need to trade. They're under pressure to make money. And that is one of the big downfalls for a lot of people, especially new traders. So really keep that in mind, that, you know, one bad trade that you've placed because, yeah, you felt you needed to trade is going to require, you know, one or two good trades just to get you back. And that's just not fun.
No, and the feeling of losing is never as good as the feeling of winning. That's for sure. So let's talk about a couple of quick chart patterns. We did mention one before, especially in uptrends, and this is one that we saw on the CAD, the double bottom. So what if we see a double bottom in the direction of trend? Is that going to be stronger or weaker than just the double bottom by itself? It's definitely going to be stronger. And I cannot believe when you came up with this and we were talking about it, it was like a revelation, wasn't it?
It was a revelation, because I can hear the people screaming from the rooftops, but hang on a minute, a double bottom is actually a reversal pattern. Yes, it is a reversal pattern, but when it's reversing a counter trend in the direction of the major trend, that's when a double bottom is absolutely gold. And it's the same for double top in the opposite direction. When you've got a double top actually going in the direction of a downtrend, a prevailing downtrend, when it's actually reversing the counter, they are worth their weight in gold. They're the real patterns that you want to be following. And if people actually followed only double tops and bottoms in the direction of the prevailing trend, I think you would be very, very amazed at how solid the results are and how accurate these double bottoms are. It's uncanny. And it makes sense when you think about it. Like everything in trading, everything is actually, it's a very, very logical process. And trying to pick a bottom or a top of a market or of a prevailing trend is a very, very tricky commodity to deal with. You don't want to be doing it ideally. But when you are trading in the direction of the trend, everybody tells you the trend is your friend, and it's true. If you can reverse a counter trend in that direction with a solid pattern like a double bottom or a double top, or, you know, God forbid, an inverse head and shoulders in the direction of an uptrend, the powerful patterns just really come to the fore, and you'll see the accuracy increase tenfold.
Because traditionally, most people just look for flags or they look for pennants, and they're
they take continuation patterns to basically to town. I mean, you go on YouTube and you Google configuration continuation patterns, and all you're going to see is flags and triangles. But in reality, double bottoms and inverse head and shoulders are awesome continuation patterns for longer term trends when they're reversing a counter trend. So hopefully, does everybody know when I say counter trend, what I'm talking about is the little pullbacks that we're seeing. So usually, generally, a healthy trend will have 2 steps forward, 1 step back, or 3 steps forward, 1 step back. That 1 step back, we can have a look at that as an example. It's that 1 step back that we're talking about. That's the counter. So counter trending, the major trend is these small little pullbacks that happen. We just bring that up now. So every time we see these troughs, so we can see these troughs on the long position, that's what we call a counter trend. So what we're looking for ideally is these double bottoms and these inverse head and shoulders at these T levels. So we've got an uptrend, we know we're in an uptrend, and we're trying to reverse this trend with reversing the counter with a solid pattern, like a double bottom or an inverse head and shoulders.
Yeah, and it's bringing those things together, because as we always state in every one of the webinars we talk about, not only do you need to treat trading like a business, but you also need to have as many reasons as possible to be in that trade. So I just want to quickly reiterate some things that we've seen here. Here's the US dollar CAD. We've seen that double bottom in the direction of the trend. Obviously, it's consolidated. That's really a great signal as well for us. If we jump into the smaller time frames, that's what we expect to see. So we expect to see usually some consolidation after. I've actually got a quick example up here of the US market. Now, obviously, the US market at the moment, a little bit shaky, but if we have a look here, arguably, or not even arguably, it's been an uptrend for quite a few years on the bigger time frames. But if we jump into something like the 4-hour, and this isn't as good as the cap, but what we are seeing is we're seeing this support level being respected. And see how it's being respected from over here? The support level at this 2600 kind of area on the US 500 or the S&P 500 is very, very important. And again, we see that kind of double bottom at this point. We see that consolidation around that zone, and we see the breakout. So it happens all over the place. It happens in indexes, it happens in stocks, it happens in currencies. And all we want to be doing is we want to find the best ways to trade it. And mark my words, this isn't as good is that US dollar CAD. That US dollar CAD is much better, isn't it, Ty?
Oh, definitely. Yeah, no, definitely. It's the go-to because it's been happening for quite some time. And like we've mentioned many times over, when you keep trading it while you see it, and it's not, you don't actually stop trading until something actually breaks in the system. So that has given us no reason for concern for, well, several weeks now on the 4-hour chart. So yeah, there's no reason to take it away.
True that. So role reversal, we've talked about it a few times. Let's just quickly go over some of the basics. Role reversal is basically where resistance or known resistance has been broken and that resistance becomes support, or the opposite way, which is when the support becomes resistance. So here's what it's going to look like. This is a 4-hour chart. The resistance was very good over here. The more touches it has, the more likely it is that the role reversal is going to work out as well. So let's say with the Bitcoin example we used before at 6,000, if the market had broken through 6,000, gone to let's say 5,600 and then pulled back to the 6,000 zone, if we found other reasons like a double top or whatever else there to be looking at shorts, that is going to be a lot stronger because of the way that 6,000 held 4, 5, 6, 7 different touches over time. This is how role reversal is going to look in a kind of a trending market. So here we've got the downtrend. We can see here that every time the support became the resistance, and it kind of gives us those easy opportunities to get involved with the trend on the pullbacks, because we know a lot of you guys, we love to get better price than the price it was. A lot of people can't handle taking this candle here or the confirmation break because they don't like the idea of selling when it's already at its lowest point. They prefer the idea of seeing that the market's gone down to a lower point and they're getting the better price. It's amazing how we are like that.
It is. Actually, I've got a question that we might actually answer live here because it is actually very relevant to what we're talking about. It's Peter's asking, do we think that pullbacks or retracements at key levels are stops or pendings being triggered or not? With institutions wondering if they see those orders and that they are using them to move the price. Well, look, there are definitely pending orders at these levels. There's no question, and some of them are ours. I can tell you that, because at the end of the day, when we see things like this happening, we are looking for that pullback. When we do miss the initial move, as should most good traders, you would be looking for the next logical pullback to actually enter in the direction of that trend. Now we can see here that every time price has broken through the green resistance and come back and the green support, and come back, if we've missed that initial move, it's no point just jumping in for no reason other than a pullback. So we would be setting a pending order definitely at the place of the break and waiting for that price action to happen. And we would be doing that on every single pullback. In regards to whether they would be a stop level, that really depends on where. If people get a little bit gun happy and they actually just enter as soon as a break happens, even if they've missed the initial break, they just enter in short. It is a logical place that a lot of people will put their stop loss just above the break, and that is why a lot of the time when it does go and touch the resistance again, you will see a big spike through that, and that generally is price being pushed up to take out a lot of the stops of the weak money that really got in, for no apparent reason other than the break happened and they missed it. So ideally, if you actually got the initial break, you would have entered a lot closer to the break and your stop loss would be considerably higher. So by the time these other people are trading, you're already well and truly up. So to an extent, you are right. They are pending orders triggering these pullbacks and the stop losses of the people who haven't really entered at an optimal level.
And most people, a lot of beginner traders will counter trend. That's just the way that we are. We like getting the better price. So a lot of beginners will be buying here saying, oh, it's going to go return back up to the highs or whatever it's going to do. So they're going to be counter trending or they're going to be getting involved with the shorts, but their stop losses just aren't going to be adequate. They're going to be that fixed 50 pips that we've all done. We've all been there. We've all pressed the sell or buy button, put on a 50 pip stop loss and said that'll be good. We're not using the price adaptive stop losses.
Fixed stop losses is a dirty little sentence in our language at our webinars. So anybody who have a chat with us, because fixed stop losses across all trades will not work. we can
Yeah.
assure you of that. They've got to be
Oh man,
dynamic.
fixed
Okay,
stop losses.
they have to be
Yeah, the
dynamic.
amount of guys we trade and coach and stuff like that that come in and they've got the fixed stop loss, and you just look at their results and you go, wow, that's a huge point.
Unfortunately, fixed stop losses are generally correlated with basically a fixed risk that people think they're risking. Say they want to risk $100 per trade or $200 per trade because that's the right risk percent. Even though they're thinking they're risking the right risk percent, what they're doing is making their stop loss fit the lot size they want to trade rather than the other way around. What you have to do is actually work out where your stop loss needs to be and then adjust your contract size to make the risk correct to where the stop loss needs to be, not the other way around. So the stop loss has to be where the stop loss has to be, and the risk is measured in the contract size to fit that stop loss.
Just jump straight into that CAD quickly. Let's talk about that. If we were trading this, let's say we're trading up here with the buy orders, we would need to be placing our stop behind the last swing. So our stop would have to be here, and our buy would be in this zone here, and of course our profit would be at the top here. So it'd be well over 1-to-1 trade. But that's the kind of concepts you want to use. So yeah, absolutely. Just quickly, because I know we need to wrap it up and get some questions. Step 3, optimize your entry. Enter based on confirmation, not on gut feeling. Don't break even trades with fixed pip amounts. Again, we talk about fixed pip amounts. Use percentages as much as possible. And of course, spend time learning the way the market moves. At the end of the day, the more time you put into the charts, and that's what they call chart time. A lot of people call it their education. I like not to lose money in my education, but yep, fair enough. And spending the time, it is very, very important. We actually prefer that people start a little bit smaller, they gain their confidence, and then remember, you're building a fully scalable trading business effectively. Of course, we want to target higher R multiples. We want to go for over 1-to-1 risk-reward trades if possible, practice our discipline, all of those types of things. And then, of course, we want to build a trading system based on multiple entry criteria. So this is just an example, but what we want to do is we have a pressing system. We build all of our trade systems around that, which is effectively a score-based system on as many reasons as possible to be in the trade. But these are just some simple concepts with price action as well that you can use. So things like Fibonacci retracements, candle confirmation, support resistances, patterns, all those types of things. You build up as many reasons. Maybe you need 75 points worth of reasons to trade, and then you trade it. So that's the kind of thing we're talking about there. And of course, our version is Presic, which is price action, risk management, effectively multi-time frame based stuff, chart patterns, indicators, and charting techniques. So there's quite a few things there that are worthwhile looking at. Tyron, do we have any questions in the room that we want to answer there?
We do have a few questions. We've got a question on gold. We can have a look at the gold chart. Let's take it over to the gold chart and let me just see what time frame we are looking at to see if we can answer this as accurately as possible for Stephen.
Sure.
On the daily time frame. So Stephen's asking gold is. Yep. Yeah, so Stephen's asking that gold is back at support. With the correct go candle, would this be an aggressive inverted head and shoulder entry on the daily time frame?
Okay, so I think what we're getting at here is that, well, it's definitely back on the support. So I think we're all in agreement that this is the level. Now, unfortunately, what did happen previously was the market did come down to this level. It found support initially, and then it broke it. So it's not going to be as strong as it once was, because at this point, we were saying this is incredibly strong support. Then the support got broken. So what I'm thinking probably is happening here from a price action standpoint is we're seeing a kind of trend line with the bodies happening here. So this would be what I would be looking at in the market. And yes, we would want to see as much as possible some form of kind of bullish candle or pattern on the small time frame. From the inverse head and shoulders standpoint, what you're seeing is you're seeing kind of this being the left shoulder, and then this little bit here being the head, and then this bit being the right. Look, it could kind of look like one, but it doesn't look incredibly clean. I've actually got an example of an incredibly clean head and shoulders here. So what we'll see is we'll see the left shoulder here, and this was the New Zealand CAD daily. And then we've got this really nicely formed head. And then we've got this nicely formed right shoulder as well. And when we are looking at patterns, we have to make sure, does it make sense to us, and would you trade $1 million on it? Because if you wouldn't trade $1 million on a inverse head and shoulders or a head and shoulders pattern, then you're probably not going to, other people aren't going to do it either. And that means the big guys aren't going to put their livelihoods on the line when they're trading it. So it's very important that we always look for the patterns as best as possible. And I think in this case, what we'd be doing instead is we'd be looking at a trend line like this, we'd be focusing on the support, and we'd be looking for the go-to reverse change of trend.
Okay, so we've got another question here from Sanjay. He is asking, is our entry point always on the retest of the resistance converting to support, or do we short the resistance on approach?
Okay, so do we... Okay, so we don't short it on approach, if that's what... When we're talking about that, are we kind of saying, let's say with the... I think we're talking about the pound here, would be a good example. So does he mean, are we going to short into this support?
I believe that's what he means, yeah.
Yeah. No, we're not going to do that if possible. The reason, that's basically being preemptive. And the problem with being preemptive is, while sometimes you're going to be right and you're going to look like a genius, unfortunately, until a candle is closed and it's broken past that support, we cannot be sure that the market is going to lock that in time. And what we mean by that is, once a candle is closed, it can't be reverted, it can't be changed. So when the market chooses, and let's say it does choose to break below this support here, it's going to be locked in time and cannot be taken away. And a lot of people are going to pay attention to that. Whereas if we start shorting into this zone right now, it might look very different tomorrow. It might come down, touch this support, and then be up here tomorrow. You never know. So you always want to wait for the confirmation. That comes down to discipline. And we all do that mistake. Everyone does, because we love to get in early.
We do. Okay, we've got time for one more question. We're going to go with, can we go over how much do we factor in 00, 000, quadruple zero as levels, and if we consider the 50 or 25 levels when fine tuning our support and resistance or roll reversal levels?
Yes. Okay. Well, look, parity is obviously very important, just psychologically. So you definitely give it some scaling. We don't put it in to our systems in terms of our Pressix system as a point-based thing, but it helps us as psychology understanding those levels. So in the stock world, and I'll just quickly mention that, a lot of stocks move to $10 multiples or $100 multiples, those kind of things. In the currency world, $25, $50, $75, they are important, but I wouldn't put too much emphasis on it, because the market knows that we really like trading the 00s. And I find that sometimes you'll see the Australian dollar hit 70, but it won't hit 70. It'll go down to like 69.30 and then fully bounce back. And everyone's sitting there at 70 buying it. And they're just buying it because it's $70, it's 70 cents. And it's not a good enough reason. So we want to be looking more for the price action reasons.
So to answer that, yes, we do pay attention to it, but it's certainly not the preliminary driver of why we would put support or resistance at a certain zone. It just adds a little bit more, I guess, strength to it, especially a support level. If it's coming down to a parity line or coming up from below to a parity line, the resistance is going to be very strong there, as would the support be. But in the stock market world, yeah, absolutely, it does mean a lot more. 00s, like round numbers on dollars, like $30, $50, all of those. Yeah, if the support is there, let price action be your guide. Always let price action be your guide. And if the number's there to support it, that's just great.
Yeah,
so
very, very true.
we're just gonna we're gonna wrap it up now. In regard to the we've got a webinar tomorrow night. If anybody's interested in joining it, we're looking at the live market, similar to how we've done tonight's format. We're going to be delving right into the live markets and some smaller time frames. So if anybody's interested in joining us, I'm going to post the registration in the link window. So yeah, feel free to join us tomorrow night, and yeah, we'll be looking at just the markets, how they're moving, and we will be going into a couple of smaller time frames to see if we can actually spot some trades that are setting up, and basically see if we can't isolate a couple of good trades.
Yeah, absolutely. And a few people just kind of sent me some late emails. We did run a Black Friday sale over the weekend, and a few people missed out. So we thought we'd just let everybody know that the code PEPPER30 will give you 30% off any of our courses at the moment. So if you're interested in taking it, I guess, the next level and talking about Presic and starting to learn those things, we do have that on fxevolution.com. Well, look, thank you very much, guys, for joining us, and we hope you enjoyed that price action masterclass. Start to go and have a look at that pound, check out that US dollar CAD and US dollar yen, and start to think about the bigger time frames and then bring it down to the smaller ones. We look forward to seeing you next time.
Thanks, guys.